Wednesday, the 11th of November. I am Bosin Amafai, and this is Frontier Opening Bed. Ali Kansacho, CEO and founder at Rich Frontiers Management in Nairobi, and Ayode Jiebo, who is the head of research, head of economics and strategies at Greenwich Merchant Bank in Lagos, Nigeria. Thank you, both of you, for coming on the program. We appreciate your time.
It's a pleasure.
Thanks,
Quite a whole lot to talk about on the show today. Let's get the ground running. Not a particularly bad day for Pan-African equities markets. The 5 markets we cover on a daily basis on the show. In the green territory, Nigeria 1.25%, the BRVM in Cote d'Ivoire 0.12%, the Egyptian top 30 index 2.22%, the strongest of all, Kenya almost 1% in the green, got its 140 reading back. South Africa continued to pipe on above the 50,000 reading on the All-Share Index 0.64% on the back of the global equities market rally that we saw on the Pfizer vaccine and a few other news around that as well. Let's go to the East African market, and the Rwanda's central bank is holding its monetary policy meeting today. Is will it hold, cut, or whatever, lower interest rates? That is what the conversation really is. Uganda, inflation expected to remain above 5%. That's according to the monetary policy. Also in the news this morning, Uganda has asked the China Export-Import Bank to postpone its debt repayments for the Karuma Dam power project because of delays in the construction. That's according to Bloomberg this morning. East Africa's customs head of customs unions will be holding their 48th meeting also today. Kenya is still moving ahead with the coal power and auctioning additional blocks in the country's eastern and region. 8 years after going to court with the Kenya Revenue Authority, the government has won over the battle against ABSA. Nakumatt liquidation finally is now moved on to next year because of the virus related. Nobody wants to go into those stores and whatever for now, so just leave it there, keep them locked up until we have a clearance over the virus. Ali.
So, Boyson, if I might just start firstly with developments in Ethiopia, where you've still got an unfolding and fluid situation in Tigray province. There are various reports I've picked up on significant number of deaths, an airport being captured, and we need to keep an eye on that. It's already hit the Ethiopian Eurobond market. Eurobond yields have spiked about 111 basis points on heightened political risk in the last 4 or 5 trading days. It's south of us in Tanzania. Just alert you to the fact that the opposition candidate there has left the country and has sought political asylum in Belgium. He, of course, took 16 bullets a few years back, came back, fought the election, and has made accusations that there was significant malfeasance by the ruling party in that election. His departure is signaling that the political environment in Tanzania is blinking amber. With respect to your headlines, let me start with inflation in Tanzania at 3.1%, Uganda inflation above 5% target. In the context of East Africa, these are pretty benign rates of inflation, frankly. The main risk for East African inflation is typically weather-related. When we have a dry spell, our farms don't produce, then we see food inflation spike. The other component is crude oil, which also feeds through to the inflation number. So far, we're getting benign rains. And frankly, it's raining even now, which is completely out of season. And the oil price remains capped. So it's been a good outcome for East Africa on that front. Your story about Kenya to auction additional coal blocks in the eastern region, I'm just not sure around demand for coal right now. I mean, I was looking through the coal project that was going to happen in Lamu, which General Electric have now withdrawn from. the appetite of even the African Development Bank to fund these sorts of projects is not there.
No.
And the coal, I am told, is not high quality coal. So I think that's probably more a bit of marketing than serious intention. Nakumatt, which was our high-flying supermarket at the peak, had about 73 branches in the region, and of course fell apart quite dramatically, I'm afraid. And there's another story that the principal has been asked to disgorge 2 billion shillings as well, Mr. Atul Shah. Essentially, this is after the fact. It's already liquidated. This is the technical story. There is no Nakumatt you can find anymore. Carrefour, Naivas, and others have stepped into the breach. And the Nakumatt story, it is unfortunately as dead as a dodo.
Interesting, yes. And of course, the former chairman is getting billions of his personal property being auctioned, according to some reports about a month or two ago, over some of the loans they took from the banks, and of which pledges were made. Very messy end to Nakumatt, that iconic brand that I visited, one of the biggest marts in Kigali a couple of years ago, very big premises and all of that, and suddenly deep in the water. Okay, let's touch on the West Africa and Nigerian market. The biggest story making the headlines yesterday was around the criticisms of the Nigerian government on how Dangote and BUA Cement got some waivers to export cement products by land into a few neighboring countries, Niger and Benin Republic. Both companies came out yesterday to issue some statements on social media clarifying that it was a very limited waiver, that the got was not a continuous one, but for a waiver for very small quantity. And they also talk about specifications in terms of the frequency of those exports. They said they reported this as listed companies, but of course the government did not disclose this publicly when the announcement or the waivers were given way back in June, according to documents cited yesterday. U.S. Energy Information Agency revises OPEC average volume for next year to be 28.75 million barrels per day. Goldman Sachs also cut Brent crude up forecast from $50 to $47 per barrel for 2021. Startup Kuda in Nigeria says it's raised $10 million to expand its first challenger bank for Africa. The COVID-19 problem is not over yet, so Ghana is throwing an additional 100 billion cedis funding into that. We expect the details of that this week. And Cameroon, to the Nigeria's southeast, is kicking off a new reinsurance, 15 billion CFA franc as takeoff capital. And Bloomberg reported this morning, Nigeria's billionaire Benedict Peters is putting $1 billion on the table to dig for mine for platinum in Zimbabwe. Here is it, by the way, where this money is coming from, why Zimbabwe, and all of that. But again, the mining industry has been critically really good. Energie, which of this would you want to step into first? The clarifications around the BUA Cement land border, is that a big one for you?
Okay. Yes, I think I would like to start with that. I think what is really happening is the government not disclosing this ahead. So the quoted companies have done what they should do. As a quoted company, there should be disclosures. But when you now have, why it's generating so much buzz is that you're having very few companies enjoying some of these privileges. And it means that for most other companies that may be also their competitor, you're not giving them that fair level playing ground, giving them some hedge. And at the end of the day, they can even, they become market leaders and dictate prices and enjoy a huge economic of scales. And for most of other companies within those areas, they are unable to compete favorably with them, and most times they go under. So I feel that the government, in my view, should have also disclosed, like we had then when CBN was giving access to some companies to be able to import. At least it was in the public, and even if there may be different views to that, but it was already in the public domain. So as such, when those companies are making some of those disclosures in their financial statements or their financial reports, it's really not taking us by surprise. And I think that's what has happened yesterday. So the communication structure needs to also improve in this light to further provide confidence in the business sector. So also looking at the review of the EIA, looking at the review of the average production, if you would know what most of them have been trying to do is they are trying to see how we can keep oil price at a level where it makes business sense, even if the margin will not be significant. It's not, we've all seen what happened when it dipped to less than $20 this year. And the prices were going for as low as, when you look at the costs, when you factor in demurrage and stuff, was almost in the having negative carry, if I'll put it that way. So what OPEC is also trying to do is to see how prices can be kept at very reasonable rates. And looking at the revision of the forecast for oil price, luckily for us, is still above our budget benchmark of $40 per barrel. Any sharp decline below that $40 per barrel would put the government under pressure on how to meeting the budget for 2021. This year we had to revise to $28 from the $45 initial or the approved benchmark.
Okay, a great one. Let me quickly ask Ali. One of the stories I mentioned, I touched on earlier, was that Uganda is asking the China Exim Bank, the Export-Import Bank, to delay debt repayment over the Karuma Dam project because it's being delayed. Looking at Zambia, deadline is Friday, October the 13th, to prevent a default. We have some problem coming here.
We definitely do. I think Lusaka was the canary in the coal mine in many respects, in that we knew this problem was coming down the pike from quite a time back. I mean, we knew this was going to be a challenge. I think that the main thing that we're going to learn from Lusaka, unless they pull a rabbit out of the hat, is how creditors are going to manage default situations. We've spoken about it, but now we're actually going to see it unfold in front of us. But the phenomenon that we're witnessing in Lusaka is something that is actually Africa-wide in many countries at the moment. Uganda obviously being a little bit more preemptive and entering into negotiations. There's been a lot of denial among some of our governments who said, no, nothing to see here, move along until the crisis comes and bites them. So, for now, this is a highly sensitive geoeconomic, political situation. And I think in China's case, where a lot of pressure has been brought to bear on them, in particular because so many of their loans were actually not that transparent. A Eurobond, you've got the prospectus, you know how much was lent, you have a good idea of what's going on. A lot of the Chinese lending is opaque and it's not visible because it's been done with the parastatal, it's been, there are lots of other loans. So that whole unraveling brings an enormous complexity to the problem. But I think, the way I look at it, I know the IMF are talking about 3.1% GDP next year. I think that's a fantasy. And the problem is going to get worse before it gets better. So far, we've dodged the medical emergency, but we are deep in the midst of an economic one.
Indeed, I think we are. And China being part of the G20 on one hand and negotiating its own deals with Africa on the other hand provides a very curious scenario in which it uses this China Export-Import Bank and other infrastructure development agencies to deal with Africa on one hand, while still being part of the G20 debt for Africa on the other hand. It looks a bit complicated, but we'll have to find a way around it one way or the other. Let's touch on Southern Africa. Of course, the story about a Nigerian billionaire putting $1 billion on the table to dig for platinum in Zimbabwe was air-raising this morning when I saw that on Bloomberg. Moody's new reports is talking about the Southern Africa Customs Union, the payments to Botswana, Namibia, Eswatini, 2021 to 2023, new short-dated bond notes to cut borrowings to Pretoria. Pretoria is getting it up to his neck right now as far as debt is concerned. Ramaphosa's economic restructuring plan and the new budget is being knocked by those who are experts in the mining industry. Say that's not good enough, will not be able to attract that investment they need into the mining sector. And if $1 billion is going to Zimbabwe, perhaps something is better there than in South Africa when it comes to mining. Manufacturing sector contracted 2.6% year-on-year in September. Telkom South Africa mobile data revenue surged 54% in first half. Well, that's good. But who's gaming? September. Sun International revenue up 73%. Did folks just go to gaming after the lockdown? Tell me something, Ali. I'm sure you're smiling all over.
There's a great selection of headlines right there. Let me start with something. South Africa's Cyril Ramaphosa, been criticized a little bit like your president for being a bit slow, made a major political move with respect to Ace Magashule's interdiction yesterday. So just investors need to bear in mind that he's been kind of comatose, but now he seems to be making some political maneuvers. Let me start with the short-dated bond note to cut borrowing costs. Look, you've got very low historical rates in South Africa, in many emerging markets at the moment. The temptation, of course, is to reduce your borrowing costs by going into the shorter end of the curve. This is something Brazil has done. The challenge with that strategy is that the rollover risk becomes very, very high. You're putting yourself at ransom with international investors, and given the volatility in the global environment, that the trade-off between lower rates and putting yourself as a hostage is a very delicate one. So that's something to bear in mind. Manufacturing contracting 2.6% year-on-year in September. This is historical backward looking. We're going to get one major bounce. The numbers are going to be eye-catching, obviously, because we've gone from the hard lockdown to the opening up. So it'll be interesting to see what the future data points show us. Okay. Big Four, customs union payments, that's all about low trade, the lockdown, and so forth. Botswana is wrestling with probably the fastest growing infection curve at the moment, but off a very low base. It's something to consider. Telkom, that's a very big surge, 54%. Safaricom was about 14%, just to give you a benchmark comparison. So they've really done something right there. I wonder what it is. That's eye-popping. And it seems, if you look at the next headline about Sun International revenue climbing 73%, it tells me everyone was gaming on their mobile phones, it seems, in South Africa during the lockdown. I think that's my take.
And perhaps they're using Telkom, and perhaps they're using Telkom data.
Yes, I think that's what it's telling us, right? So they should be crazy data-consuming gamblers.
Yeah, interesting. Ayodeji, what do you think Nigeria is looking at when you talk in terms of costs of government borrowing? South Africa is issuing new bond notes to lower the borrowing costs for the government. I think Nigeria, do you think we've been able to reach that level in which the government can say, look, our cost of borrowing is now at an affordable level locally using treasury bills, naira bond, whatever.
Yes, very interesting. I think for the government, they are really happy with the current level of interest rates. Today, we still have another treasury bills auction, and the expectation is that rates will also decline further due to the limited supply relative to available liquidity in the system. So on the government side, there's been significant savings, and I feel this is the time we need to come up with more structures like the Sukuk bond that is directly tied to infrastructure. It can be, even if we don't want to call it Sukuk, it can be a project bond that we list some of these major projects, and we can be able to implement immediately. What has been happening is the government has been releasing funds in tranches to a lot of these projects, and projects that should be completed within 1 or 2 years takes close to 10 years. And when you look at the value you are losing within that extra 8 years, it may make sense to partner with a private investor, rate some structured bond and concession those projects, and we begin to reap that benefit of that those projects bring on board. So for this low interest rate environment, I think very positive. And also for the private sector, we know in Nigeria we've always been talking about the crowding out of the private sector guys. So we believe that this low interest rate environment now offers them what I would say the opportunity, enough headroom for them to come up with products and still charge at attractive rates, which will still be beneficial to the issuer. So it's for the investors will not be too happy when you look at it vis-a-vis inflation rate. But for most corporate issuers and for the government, it's also positive for them. But we're looking at there needs to be a balance in reality, and but what the CBN's objective is that investors should shift away from just putting funds in risk-free assets. They should try to take on more risk, and that's, I think, over time people will build capacity in structuring, will build capacity in coming up with watertight structures that funds will be protected and those funds will be channeled to the real sector.
Okay, a very interesting angle you're raising to the entire issue of infrastructure in Nigeria, because if you need to do a project for 2 years and it takes 8 years to 10 years, no private sector folks, investor would want to get involved in such a project, and then you come through various issues with the government. So even if you do an infrastructure fund on your side, you need government right of way, you need government permits and all of that. So if you take funds from investors and you say, look, we're going to do this for 2-3 years, and it takes 2-3 years to get the first permit from the government to even start tilling the soil, then this whole infrastructure thing is not going to happen. That's just it, because interest rate at zero level in Nigeria, yet the funds are not flowing into critical infrastructure by the private sector. And the government keeps saying, look, step forward, let's partner with you. But the private sector keeps saying, hold on a second, just the way Ali is folding his hands. I said, sorry, we're not sure. Isn't it, Ali?
Yes, I want to come back to DG. I mean, if at the beginning of the year, someone had said your T-bill rates are going to be less than 1%, there is a remote possibility you're even going to have negative interest rates. I don't see why you shouldn't if the momentum has taken you this far already. Your inflation rate will be double digits. You would have been quite perplexed at this outcome, I would have thought, right? I think most. So, Ayodiji, my question to you, is this sustainable? Do you think the man at the central bank is an absolute genius that he's brought about this outcome? But what Barson was saying was everyone's sitting on their hands, no one's doing anything. Is that because people feel that the return on money is not correct? It has been manipulated.
Okay, I think I like your question. In terms of, it's really weird when you look at it for us to have this low interest rate when you also comparing it to inflation, and because it discourages savings and it's putting pressure on other classes of assets, especially for FX, and that's why you see CBN trying to you see that pressure mounting around the FX issue. So it is not sustainable, and I feel that over time, we're looking at first quarter of next year, there should be some um, improvement in interest rates because government may want to front load their loading in the first quarter if they're able to get to start implementing the budget. And what we've also seen that reduction in inflow. So what we've been seeing within the fixed income space, when you look at the OMO auction currently now, is the foreign guys that are already within the system waiting for them to repatriate their funds have continued to recycle those funds in OMO transactions. We would see that impact when we see the Q3 importation data very soon. We would see that foreign inflows have reduced. And for the local investors, it's really it looks the structure it's not really looking pretty interesting, and the negative interest rate, yes, it's almost why I feel that we may not get into, in my own view, the negative interest rate is that for investors, most of them may prefer to keep their funds at zero rate than go and bid at negative interest rate. So you just leave your funds in your account. But like I said on my response to you on Twitter, 0.01 may not be impossible, but not 0.01 is almost like not getting anything, because what is happening now in Nigeria is that even banks are not willing to collect deposits. So most of the PFAs have been able to place funds with these banks. Because when you look at the loan to deposit ratio policy, if you collect deposit and you're unable to create loans, you may suffer from the discretionary CRR debits of the CBN. So the PFAs that have most of the funds now are under pressure. They have a lot of uninvested funds, and that is why we are seeing some of those funds finding their way into the equities market. What I feel may eventually happen is we're already seeing a lot of private type structure bonds in the market now. So as we progress into first quarter of next year, those private sector structured corporate bonds, commercial paper may begin to absorb a bit of those liquidities. And the focus is that if most of these projects that are unable to access funds prior to the reduction of or the lowering of this interest rate are now being able to access these funds, then we may begin at a cheaper rate compared to the short-term loan they get from banks at higher rates. Then we may begin to, in the medium to long term, begin to see that impact. But this is not sustainable. There needs to be a change in this structure. This is not what is going to solve the problem of growing the real sector, and there needs to be a major change there.
Thank you.
Interesting. It's complicated, but it's okay. Let's see how it goes moving forward. Thank you, Ayodeji. Quite an interesting one. Let's wrap it up this morning. I'll just give a few headlines for the North African space. CI Capital Holdings declaring net profit 330 million Egyptian pounds for the first 9 months. I'm interested in Morocco's power infrastructure firm Energie Electrique doing some capital reduction to remain small, nimble, and more effective. And Amer Group posted a net loss of 12.6 million Egyptian pounds in the first 9 months of the year. Let's leave it there for today, gentlemen. Thank you so much, Ayodeji Ebo from Greenwich Merchant Bank and Alikan Sachu in Nairobi at Rich Frontiers Management. Thank you. Have a good day, everyone, and see you tomorrow, Thursday.